It's a pleasure for me to be here today to discuss financial integration and post-trade harmonization, two topics which are very important for the ECB, for the European Commission, but also for all the stakeholders active in the financial markets and largely represented in the audience. Financial integration is indeed a key feature of a sound, efficient, and competitive financial market, and harmonization is often a condition to achieve integration, though it is not always enough by itself. Today, I will just first say a few words of why financial integration is so important for the smooth functioning of financial market and why harmonization is an important tool to achieve financial integration. And then I will briefly provide an overview of the various initiatives that the ECB and the Eurosystem have been pursuing in this field, including some initiatives currently underway. So let me start with the importance of financial integration. Market initiatives on financial integration are geared towards creating a marketplace in Europe where counterparties can use their assets, securities, collateral, safely, effectively, and efficiently to generate liquidity and support the fluidity of market transactions. This would also create conditions for fair competition among market participants that could in turn pave the way for further efficiency gains. I think it's clear to all that financial integration contributes to a better allocation of resources and greater opportunities for the market. I would therefore like to spend some time now looking at the relation between financial stability and financial integration, since the picture here is a bit more complex. While there is ample consensus in policy debates and research that financial stability can foster financial integration, the opposite is not always true. Financial integration can indeed promote financial stability, but only if a number of conditions are met. First, it should allow for transparency that could in turn foster confidence in the markets. Second, it should contribute to establishing the right incentive structure in order to ensure longer-term viability. And I underline longer term, because what we are seeing now in the short term is not very satisfactory. Third, an excessive concentration of risks and the need for leveraging should be avoided. Finally, it should be accompanied by an integrated and comprehensive risk-based oversight and supervision framework. The recent crisis has triggered a trend of disintegration, resulting from inter alia efforts to reduce portfolio risk by decreasing diversification. A careful analysis of the experience that we have gained during the crisis would, however, confirm that the lack of integration of the infrastructure has been exacerbating the effects of the crisis. Just looking at the Lehman experience, and in this respect I will also suggest you to look at the paper that the ECB published in this respect 1 year ago, the coexistence of different default procedures has led to greater complexity and confusion in the activation and smooth execution of the default management procedures. The default of a single participant has been addressed inconsistently across different financial market infrastructure, including financial market infrastructure that were belonging to the same group. This inconsistency has generated losses that could perhaps have been avoided or at least limited in case of an harmonized regime. Also, the existence of different and again inconsistent market practice has increased the level of opacity and therefore of uncertainty. This has been certainly one of the reasons driving liquidity hoarding behavior, which in turn has led to uncollateralized money market functioning poorly or not functioning at all, thereby increasing the cost of short-term funding beyond that may be justified by the effective scarcity of liquidity. So, practical experience during the crisis seems to show that a more integrated post-trade environment would make management of stress situations more effective. And having integrated infrastructure is, in fact, one important element also, is also an important element of financial stability. In Move now to the importance of harmonization activity. Harmonization, as I said, is an important tool to achieve financial integration of post-trade activities. An integrated infrastructure, irrespective of the specific architecture of the post-trading environment, so whether or not there are one or more financial market infrastructures, needs harmonized features to ensure a level playing field for the participants and to function smoothly. Where there is one infrastructure only, there will be a need for this infrastructure to operate according to common rules, otherwise there will be problem of level playing field among participants. Where there are a number of interoperable financial market infrastructure, then harmonization is needed in order to have reliable linkages between the different components of the system. And I mentioned before during the panel why even in the CPSS IOSCO recommendation of link, minimum harmonization between risk management in case of interoperability may be required. And I feel that it's not a coincidence that in the United States, in the end, a single and therefore harmonized CSD has been introduced by law as the only way to overcome fragmentation following the failure to create linkages that was not possible because insufficiently harmonized the local systems. So harmonization is an important tool, but harmonization is, however, difficult to achieve. And I think it's even more difficult in situations where Europe, where you don't start from scratch, but you start from a local market practice that had been functioning for long before that the European project was launched. You may remember about the difficulty of the integration, a debate that took place at the time of the creation of the target system concerning the common operating days. Maximum harmonized would have resulted in 152 bank holidays in 1 year. So it was not impossible to take all the best practice of all the countries. Minimum harmonization would have created a lot of irritation for different stakeholders. And you have no idea on who are the stakeholders. I think Jean-Michel may remember that we received a letter from an archbishop complaining that the target was working when it was a religious holiday in his own jurisdiction. Today, in Italy, Portugal, and Spain, we are celebrating the Father's Day. But you may know that there are 6 different dates for Father's Day in Europe. In the other 24, soon 25 with Croatia, EU member states. So let's try to imagine the difficulty to harmonize the Father's Day in Europe. You know, my son complained that in the European school they don't have a Father's Day because of these differences. This gives an idea of the challenges that we are facing in trying to bring harmonization to the post-trade environment. The final thing I wanted to say is that harmonization is a condition necessary but not always sufficient for ensuring integration. And part of the trickiest in this is that sometimes harmonization takes the form of a minimum harmonization. And this minimum, that leaves a lot of discretionality on what to do up to the minimum, is sometimes source of a lot of troubles. Again, I want to use another example that does not relate to post-trading, but is inspired by today, 19th of March. In the ancient Roman religion, there was a festivity, the Quinquatria, it was called, celebrated on 19th of March. What was the Quinquatria? There is harmonization in the information sources in saying that this was a festival dedicated to Minerva, and this was celebrated on 19 March. But then there is no harmonization in saying why it was called Quinquatria. According to Varro and Festus, Quinquatrus was celebrated because it was 1 day only, but the 5th day after the Edis of March. While according to Ovid, it was celebrated for 5 days, and that's why it was called Quinque in Latin, it means 5. This was the commemoration. And then, according to some, it was a commemoration of the Minerva birthday, while in other case it was simply a festival dedicated to Minerva because her temple was on the Aventine. So this example can just point to the fact that you feel there is harmonization, you feel there is a common understanding, but then in practice, when you have to act or to do things, you discover that there is no harmonization. Of course, this example has no counterproductive effect, but what I mentioned before on the default management procedure during the Lehman crisis, this is something that has led to consequence. And here, the fact was that at the time of the Settlement Finality Directive, unfortunately, we have not been able to go beyond the minimum harmonization. And this has been enough to have a different jurisdiction interpreting differently and giving the origin to different procedure. Of course, so this is not to advocate full harmonization in all cases. There are cases where common objective can be achieved by different means, and it's even good that the common objective is achieved by different ways. But I think it's important that when there is harmonization, there is a lot of clarity on what is really harmonized and how. Let me now turn to the EU initiative in the field of financial integration. From both the market and the Eurosystem side, a lot has happened, as it was mentioned before the coffee break, and is happening to promote financial integration. And it was taking a few moments to reflect on how far we have come before we look at how much farther we can still go. Starting in the world of payments and going back to 1999, the first big project of financial integration has been the establishment of Target, the common payment system for euro-denominated transaction of the EU. And in 2007, Target 2 was launched by establishing a single RTGS platform for settling both domestic and cross-border payments. Target has been a cornerstone to the integration of the uncollateralized money market. And when we look at the level of integration of different segments of the markets in Europe, I think it's not a coincidence that the most integrated is the uncollateralized money market, because it's the closest to monetary policy operations that are integrated, but also because of the presence of the Target system. The Eurosystem has also done, in cooperation with the Commission, a lot of effort about SEPA, the Single Euro Payments Area project, even if this is not an area related directly or indirectly to post-trading. And I feel that even the logic of SEPA is not different in terms of benefits and opportunities that it will create to the objective that we want to achieve in the area of post-trading with the establishment of T2S and with the other initiative for harmonization. Coming closer to home and to the initiatives that are now underway in the field of securities clearing, collateral and settlement services, I would like to focus and elaborate on those activities that are crucial for enabling market participants to deal with the increased demand for collateral. These, I think, are very important today for at least 3 reasons. The first is that the current context is characterized by higher collateral regulatory requirements. So this means more collateral, more need for collateral, and more need for high liquid, high quality collateral, whatever it means. The second is the fact that, as a matter of fact, there is a greater use of securities, of collateralized transaction compared to uncollateralized transaction. In this, I feel that the figures of the ECB Euro Money Market Study and of the European Repo Council survey are aligned in showing how there has been an increasing, steady increase of secured lending, about 30% year on year. Finally, in an increasingly global and interconnected market, even when sufficient amount of collateral exists in principle, this may not be enough if it cannot be quickly and safely transferred to where it is needed. So you may have the collateral, but then you cannot make it available where the collateral is needed. Setting up efficient processes for using and transferring a wide range of collateral assets between counterparties, central banks, and infrastructure, irrespective of the European country in which the collateral is held, will help to reduce the strains on today's fragmented collateral pools. Thus, post-trading harmonization is first of all in the interest of market efficiency and liquidity. Central bank efforts to remove national boundaries when transferring collateral across border are also continuing due enhancement to the corresponding central banking model, to CCBM. And as most of you know, next year, we plan to introduce two important enhancements to this model. First, there is the intention to remove the so-called repatriation requirement. This has been closed by the market and finally agreed, also thanks to T2S. And this change will facilitate more optimal management and use of collateral holdings by market participants and allow for a wider use of assets in tri-party collateral management services. Second, the CCBM will support cross-border tri-party collateral management services. Whereas today such services are only available in a small, albeit slowly increasing number of euro area countries, Germany, France, Luxembourg, and Italy, during the course of 2014, they will become equally available to all Eurosystem counterparties on a cross-border basis. So we have planned to integrate the existing tri-party facility and also the new one that may come because of creation of new CSD, provided that these are done according to standards that have been published 3 years ago. Before closing, I would like to mention two other market initiatives which are currently being discussed by the ECB Securities Market Contact Group, like OGESI, and which I see as important deliverables for this year. The first initiative aimed at improve arrangement to support end-of-day collateralization and settlement process, and the second initiative is related to ICSD tri-party interoperability. The need for collateralized transaction at the close of the operating day is increasing, mainly because of the shift I mentioned from unsecured to secured funding. As a part of this trend, interbank treasury-related transactions, which used to be uncollateralized, are increasingly becoming collateralized. Several constraints preventing the settlement of collateralized transactions late in the day have been identified. In particular, the current CSD operating hours for DBP transactions are considered too restrictive for operations taking place late in the day. T2S, once implemented, would solve some of the issues, at least for the CSD, which are part of T2S, but only to some extent, since only participants directly connected to T2S will fully benefit from the extended timelines of T2S. Therefore, there is a need for a later cutoff time for all CSD links, whether or not they are T2S links. And on the other hand, there is a need for later cutoff time for custodian banks for collateral and cash delivery to ICSD. And I hope you have not forgotten that one of the findings of the Giovannini report was that there is no way, even with harmonizing operating hours of CSD 24 hours a day, that you may have delivery of collateral if the CSD does not have the collateral. So if the collateral is stacked with the custodian, there is a need that the custodian will adapt their timelines in a way to be able to make this collateral available where needed. Just let me close saying that I'm really happy to see so many people today who can make a difference and can significantly contribute to the efforts being made on financial integration. While these efforts may appear great at first and involve everyone, whether counterparties, CSD, regulators, central banks, or market infrastructure, the benefits will be even greater. The Eurosystem is doing its part of the work and is actively supporting the work of the market. I hope that we will soon see the rewards of all this work that has been done. I hope you will also agree that these efforts are now more necessary than ever. In time of crisis, it will be very helpful to be able to operate in an environment and rely on infrastructure that ensure stable revenues and reduce costs for funding, as well as compliance with regulatory requirements. Thank you very much.